All right. Hello, everyone. Welcome to your weekly market check-in here with myself, Greta Wall. I'm your host, and I'm joined by David Prince, the leader of T3 Live's Inner Circle virtual trading floor. David, happy Thursday. How's your day going so far?
A really good day. No complaints. Been a good week.
All right. Been a good week. All right. The topic of our stream here today is Fed cuts and Oracle disappoints. So let's start with that first topic, the Fed. This was, of course, Fed week. Monday, Tuesday felt a little sleepy as we waited for the Fed decision yesterday, and then we got it. And we got what you and a lot of the street were expecting. Now, you told the Inner Circle into yesterday's decision that you yourself and everyone else was expecting kind of a hawkish cut. So what did that mean for the market? Well, it meant if we got any downside, you needed to be a buyer because it wasn't going to last very long. Let's talk about your game plan heading into the Fed, how you traded, during the press conference and after the meeting, and then what you see from here based on what the Fed chair had to say yesterday with policy in the market.
So I always think of Fed days usually as something where you got to use your noodle, listen to the language, and you often find the best trades at 2:30. What has he said? What's the read through? How hawkish or dovish is he? This one felt very different to me because it was so telegraphed and because we knew what it was. The way we played it was simply, okay, so we're getting a hawkish cut. We're going to get no more cuts. The dot plot's going to be spread. There's going to be a split amongst many of the governors, and maybe we're just going to have to wait till there's a new Fed chair after this cut. So hawkish cut. So then you got to think of it like, okay, so that is actually kind of a negative because the market's going up into it. And if it's any better than a hawkish cut, that's a positive. So what, or should, in my opinion, is it's a win-win. So I said, if we see any downside after the announcement, you got to buy it aggressively. But I'm going to buy it if we have downside before the meeting, because I don't want to chase. And I think you get paid for taking risk ahead of the print. We have our longs, our swings, but I said, really think the indices pay you in advance because we all kind of know the worst case scenario. It's a hawkish cut, which means we've already planned for it, which means conventional wisdom of going down doesn't actually make any sense, right? The risk is to the upside because we already know what the downside is. So anything better is higher. And if he tells us the bad case, which we already know, it's probably higher too because everyone's already sold. So we actually bought the dip 621, 622, and we're selling into that. My target was 628 for yesterday. So that's how we played it. But there's obviously much broader implications. And now is a much more conventional market. There's some people out there that for 2 years they're spoiled and they don't realize healthy markets actually brought in and incorporate a lot more than just AI. So what's actually really happened is we have a new bull market that has everything to do with anything but AI, right? IWM hitting highs, equal weight, SPY, making new all-time highs, financials rolling, healthcare rolling, biotech rolling, and we see big cap today having an off day after having a great bounce yesterday. So we played that bounce. I played it through the Qs. And we actually did some Qs today too. But overall, here's what happened. Everyone planned for a hawkish cut. We got a hawkish cut, but it was much better than worst case scenario. There's going to be treasury buying. It's not QT, it's QE. And we all know he's going to be, out of a job. He's probably happy about it. I don't think he wants to deal with our president anymore. And we'll have a new chairman who's obviously going to be very dovish because that's just what Trump's going to make sure of. And everybody is already. So the template is to go high, right? We're at the end of the year. A lot of people don't want to have to pay the tax man, so they don't want to take profits. A lot of people are going to lose jobs because they haven't kept up with the indices and the success of the market, right? So they have to put money to work. So they're going to be bids underneath, and that's how we're playing it. That's how we played it today. But overall, we got a hawkish cut that was actually a little dovish, if I'm making sense.
Mm-hmm. Yeah, definitely. I feel like so much of the headline, focuses on the cut and the dot plot and what more cuts are coming. But a big part of yesterday was the QE. Like that's
QE,
huge for this
and he
market.
mentioned the jobs market being soft quite a few times. And like I said, you have to
Yeah.
actually read what he's saying. And if he's mentioning the jobs market several times, and while he's doing that, mentions inflation actually in a positive way, saying, hey, it seems to be under control. Pros, cons, pros, cons. The pros were much grander than the cons. So
Yeah.
funny enough, dovish cut, but not so much when you listen to him. Treasury buying, worried about the jobs market. That's his focus. And okay, we may not get a cut right away, but we all know if he sees weakness in the jobs market and it gets much worse, well, he's cutting again, right? He's
Right.
not like going to be content just to see us go into a recession.
All right. The other news of the day today, and what seems to be keeping the Nasdaq down, even though the Dow's up and the S&P is turned green now too.
We're in a very bullish market. People just look
Yeah.
at the Qs or Nasdaq and they're like, oh, things. Yeah.
Oh, yeah.
I mean, there's a lot of green out there.
The impact there, I'd say, is, Oracle.
Significant,
Obviously,
yeah.
Oracle reporting weaker than expected revenue, missing on revenue, beating on earnings, but the revenue miss was big deal for the market. Stock's down about 12.5%.
Cloud
today.
Wasn't impressive. Guidance on cloud wasn't
etc.
impressive.
Yeah, and it's obviously dragging down the entire space because Oracle now is very integrated in the AI trade. So, what's your reaction to the Oracle report, and then also what it means for the broader AI trade?
So here's what I said, and I'm a little shocked. I said, listen, one of the wealthiest men in the world, who's produced not only wealth for himself, but so many investors and created one of the most important software companies, has an open mic. When I'm speaking yesterday about last night, I said, tonight he has an open mic and he's got to answer some really hard questions. However, he's had like 2 months to prepare. He knows what the debt market is saying about his company as the CDSs explode. He knows that Wall Street really questions if destroying his balance sheet, in their opinion, obviously not in his opinion, makes sense. And he's got to answer these questions. Like, it's not like, I wonder what to say to make the street happy. And how can this guy not? I didn't take a bet on it because I don't love the company, but I said, you got to assume he's going to be prepared. And this guy is well spoken and he knows how to get in front of something. That didn't happen. Like, the numbers weren't impressive, and he wasn't using his voice to install confidence that, hey, all this spending has a return on investment. And this is when you're going to see it. And it's not just 2030. And this whole thing about, the spend being X amount, that's incorrect. It's actually half that. He left it very nebulous. He didn't answer hard questions. And this response is totally normal. This morning I said, I don't see any reason why it's not going to 185 today and ultimately 175. So, proper response, honestly. He had the mic to answer the questions and he dropped it in a bad way.
Yeah. When it comes to the impact of Oracle on, the broader AI space, I mean, we have NVIDIA down 2.6%, AMD's down, et cetera. So
NVIDIA, NeoCloud, Iron, MBIS for a minute, although MBIS has had a great bounce. It's not even down $1 now. Iron, Wolf, you name it, anything NeoCloud. But of course, the big guys like CoreWeave and then specifically AMD and NVIDIA also. I think it's more an excuse. And I think, are people reading to Oracle and saying NVIDIA has a problem? No. I think it's an excuse to sell as money rotates where people are really a lot more excited. That's small caps, that's banks, that's financials, that's specifically space, which has become one of the hottest spaces as SpaceX files to go public. I haven't yet, but talk of it. So I really think a lot of it is just the same thing, and then sometimes you need an excuse to do it, right? Nothing really changed fundamentally with AMD or NVIDIA yesterday. But what changed is they have an excuse to say this is not where people are focused right now. They see better value in regional banks. They see better value in biotechs. They see it in home builders. And you know what? NVIDIA just bounced, what was it, at one point about 18 points from a week ago? Okay, I'm taking some money off the table. I don't really think the read-through is bad. Here's one difference, and we talked about it in Inner Circle today. I really think we all know, right? It's not like some new news I'm breaking, uh, that people want to see profitability. They want a path, right? A pathway to say, I'm spending this amount, and over the next 12 to 18 months, here's what you can assume we're going to achieve by spending that money. And people now are not pie in the sky. Oh, revenue is going to grow in 4 years, 10 times. None of that crap. They want to see it. And Oracle basically is making them think about that again. And that's maybe why you see the irons. And these are stories that, yeah, ramping revenue, amazing. Back in their building where, they have so much power, they're going to keep being able to sell out. And I get it. Like a lot of these companies then get sold out for a year or two, but Wall Street wants to know, so, okay, I get all that. How much money are you going to make? How much free cash flow are you going to produce off this? And when is it going to happen? And Oracle is a reminder of that. So that's what I think happens. So I don't know if they really know, like if any analysts are really predicting a boatload of cash flow for any of these companies in the next 12 months. It's still a 24-month or more story. And that's why they get hit. But ultimately, some of them bounce, like MBIS, which is, in my opinion, the best of the group, because just I like the way they've built the company and they have AI. But beyond that, they have, robo taxis, and they have so much more. So perhaps that's why it's bounced as well. But anyway, nothing fundamentally has changed except people want more out of their investments now, a little less pie in the sky.
Mm-hmm. Another software cloud company that's been in focus for you, that you've been, eyeing, and I think you went long today. I think today was the day, is Salesforce.
Mm-hmm.
So talk about what you've been seeing with Salesforce and why you're interested here.
Sure. So, there's certain stocks that just get creamed and just don't do well, and they don't do well for good reason. And that was certainly Salesforce, right? It was like the poster child for a stock that really lagged everything this year. Software to some degree did, as AI threatened a lot of these software companies' business. But if there was one that was really just on the balls of its feet, that would be Salesforce. They actually had a real quarter where in their AI product, they showed some real traction and they put up real numbers and they gave us new guidance that was actually higher. And we all know who the CEO is. And well, this stock has gotten creamed and done nothing but go down. So I said after the earnings, any pullbacks will be a buy. And I kind of got lazy about buying it, and it just kept going and going. And today at 267, I'm like, I guess I'll miss it. Or it'll pull back closer to the 200-day, which is 258, and I'll buy it. So at 261, I bought it. Got a cute little bounce here, 263s. But long story short, I think this is a 275, 280 dollar stock before the year's out. It has a lot of making up to do. Certainly profitable, raised guidance, seems like traction is very much there. Great CEO, and frankly, still way off highs. And is it cheap? No, but it's as cheap as it's been on a PE basis in a long time. Not a cheap stock. So a big fan. I think there's a lot of catching up to do, and we're going up another 15 or 20 in short order. Today, it finally took a break because what did we ran 60 off 20. We ran something like 25% really quickly, maybe 20%. So it made sense to pull back, and as soon as it did, I was like, time to buy. So that's how I feel there.
All right. Tesla is in focus because Elon Musk.
It's always in focus.
Confirmed. Well, yeah, sure. But like last night, Elon Musk responded to a tweet that was talking about whether or not SpaceX would be doing an IPO soon. Musk saying, as usual, Eric is accurate. So seeming to confirm that news that they're looking for an IPO soon. What would a SpaceX IPO mean for a stock like Tesla? Because I think right now Tesla benefits from SpaceX, but if they're separate,
yeah,
what do you see?
So the story is that it doesn't help Tesla. That if anything, his money and his focus becomes SpaceX near term. That's where his wealth is growing. And at first I was like, that's not true. But then I thought, you know what? These are not small companies. We're talking about the largest IPO in history, right? That's what they're talking about, right? Along the lines of Aramco, but bigger. Of course it's going to, like, I don't care that he's one of the brightest individuals to ever enter the universe. I don't care that he's new Thomas Edison. I don't care how smart he is. He's one human being. So yeah, it could hurt Tesla a bit. Now, that said, we have to remember, right? The Tesla people, the bulls out there, they're not in Tesla because of him alone. They're in because of his dreams, which are robotics, right? And full self-driving. And bottom line, if he produces there, then it doesn't matter, right? Because the TAM is that big, and that's why people own Tesla today, and that's why it's grinding and keeps trying to get up to highs and then fails. But the bottom line is they're in there for robotics because they believe it's basically the biggest market we've ever seen, bigger than AI itself, bigger than the internet. And him himself says everyone's going to have 2 robots in their home. So if any of that is to come to fruition over the next 2 years, where are they going to sell millions of robots by next year? No shot. But if there's something that comes to fruition where you can start to extrapolate some real numbers and put concrete numbers, and full self-driving ends up, and robotaxis end up in every city, then his attention can be spread and there'll be enough to go around. I really think it comes down to short term. It could be a bit of a hiccup and definitely take some attention away. And by the way, light up a whole new sector in the market, which has been soft, which is satellite and space. I mean, these stocks have gone bananas over the past few days.
Have you seen a SpaceX launch?
I have, on TV, not in person, but on TV.
Well, so because I'm in California, we can see every time they launch satellites, we can see it from our house, and it's really cool to watch the rocket just leave this stream in the sky.
I feel like I'm in here now, right? I'm in Texas a lot of the time. Like, shouldn't I take my kid and or does he not?
To Houston?
Yeah. Like, it feels like I have to do that, right? I don't know. It just feels like what a cool thing for kids to do. So I've pondered a road trip there to do that.
Yeah. Or next time you're in Florida, go to Cape Canaveral. Yeah. But yeah, anyway, I haven't seen it from the launch site, but we can always see this. I'll text my husband because I get alerts. I have an app, and I'm like, oh, there's a launch in 10 minutes, and we love to watch it. It's so cool. But the moon has to be in the right spot, or the lighting.
Right, for everything to come through.
Yeah.
So yes, some attention away from Tesla, but like we said, it is still a real business model that really is looking to conquer some of the largest TAM we've ever seen in a business. Perceived.
Yeah. So with Tesla here at 446, it's been down.
Bottom line,
quite a bit. What are the levels for you for Tesla?
That 50-day, which is 435. So it tested it the other day. God, I'm half asleep, but I think we bought into it and had a great bounce. But bottom line is it tested that 50-day and held. It bounced almost the equivalent, 20 points in 2 days. That level has to hold. Going forward, that's key. Then we could see another 15, 20 points of downside. My gut is there going to be buyers underneath of all these key names to some degree into the end of the year. So even the ones that are more weak, like mega cap tech, which I have to include Tesla there, they're only going to go down so far. Sure, they're weak today and everyone's all excited about IWM and banks and so on, but I do believe there are buyers there. And I believe if you buy them right, you can create alpha. I'll give you an example. Like, most people would look at the market today and be like, I'm not doing the Qs, and NASDAQ's the last thing I want. I'm like, they go down enough. That's where you're going to make money rather than trying to catch the next dollar in IWM or XBI. So yesterday and then again today, I said overnight, we hit 618 in the Qs. So I won't be at a full position because the 21 days a few points beneath, but I'll have some size in the Qs if we get to last night's lows, because last night we had a mini crash and then this morning all was fine. Anyway, the point is, so we bought Qs pretty sizable, right back to 623 right now. So whether it be Tesla, whether it be the Qs, I still believe you have 3 weeks of buyers on dips. And then I think you really got to be careful just buying dips come next year. I don't think it's going to be so simple. But whether it be Tesla, big cap tech, Qs, I think you have some buyers underneath for the next few weeks.
Yeah, I think it's definitely important to understand where you are in the year and the seasonality that goes with that.
There truly are. People say like there are people that have to save their jobs, but there really are. Like there really are people out there that just sucked and we're betting against the market. We're embracing AI, whatever it may be. They're wondering, like, forget their jobs. They're wondering if they'll, even get a bonus and so on. So they're going to be buyers there because the alpha wasn't being short or sitting in a lot of cash. You always hear cash as a position. That didn't work so well this
year. Yeah. All right, Immunome. Let's talk about Immunome because
Sure.
it's a data readout coming.
Yeah,
Right.
phase
Like newer
3
data.
on a big potential drug, and phase 2 tells us there is some really good. There's a really good possibility they're going to have great success with it, and it'll be a positive readout, and it's a drug that can get to the market. However, the stock represents that. So after trading 5 in April, we're above 20 right now. Right? It's really come a long way, and the way I look at it is positive readout, we're a $25 stock. Negative readout, even though long term there's so much more to the story, this is probably 5 or 10%. Short term, it's like 60, 70%, meaning it matters. And the stock would lose perhaps 50%. Yeah, no, 50% is much, maybe 30, 40%. So I've told the street, because I like to be fair, if I'm pitching a name that I love, right, up or down, I like to keep people up to date. And I said, listen, it was, in fact, yesterday, I said, we just made a new high on the year. Stock was well above 20. It's time to size down or at least sell some calls against your position. So I'm different, right? I've been in this stock for a long time. I'm going to have a significant position for a long time. I don't know. Maybe something changes, but it won't change now. However, anything that's trading stock, I've taken some risk off the table, locked in gains because risk reward is a little less perfect, right? Down when you were under 10 and you could buy it less than the CEO had just purchased stock at 13 and you had all this cash on hand and you had a potential for a great readout, that's one thing. But now that stock's gone up 300% off lows, time to de-risk a bit. So that's what we've done. Still long, still a huge fan, still think it's a $4-5 billion company. Truly believe that, right? I'm betting on the jockey in the next 4 or 5 years, but I also know it can go to 15 before it does that. So I've minimized my risk.
All right. So we're past the Fed. We're in this like we mentioned, this seasonally really strong period with lots of buyers underneath. What are some of the setups that you like in this market that you're looking for, levels that you're hoping for names to get to so you can buy or short, etc.?
Yeah. So UNH, I really think the market broadens out. Of course, healthcare becomes in vogue. It's a little late, not going to lie. We were just down at, what was it, 320? Yeah, 320, and we just bounced hard. And I always say, listen, we can really get some alpha here. We can use the ultra. So I'm not a big ultra guy, but that one I tend to use the ultra. So when the stock came down to 320, we're buying UNHG at 18 bucks, right? And right now we're at 1970. So it's been a big win. I think on pullbacks, you can buy UNH. Just not promotional, but just facts. So you once asked me, what are my favorite stocks? And I said, there's not a lot. The market's come so far, but there's 2 that I really think are investable. And those were Rocket and Immunome. They both just make highs all the time. I actually think on any downside on Immunome, if you were to see a 30-40% drawdown and you want to invest the next 2 years, you can buy it. This man has a plan and is much grander than the next phase 3 readout. He's going to buy several companies. Let's move that aside. Housing market still sucks, right? No one is under any uncertain terms that oh my God, the housing market's hot and they're cutting rates. It still sucks. And frankly, that's where the upside is. So it's probably very investable, which means Rocket on pullbacks to the low 18s or below, or any of these housing names, specifically DHI into the 21-day, which is 149, 150. I think you can buy because I think we're going to have a series of rate cuts, whether the Fed likes it or not, as the economy slows down. Gold, we did some buying on the chat today. It's in a breakout. Looks great. Looks like it's going to 400, but that's more short-term money. CRM, in terms of big cap tech that I'm a big fan of, that's probably my favorite right now as far as levels. I think anywhere near the 200-day, you can do a buy. You can buy it. Qs, I'm a big fan anywhere near the 21-day, which is 613. I follow a lot of stocks, so that's why I'm giving you a lot, because they're all equal to me. What I mean by that is I made a crap load of money on Nvidia just recently. Most people will be like, Nvidia's been broken. But when everyone was panicking 2 weeks ago and it was 169, 170, we bought all it. And it bounced all the way back to like 188. I think it got to 190 for a quick moment. So my point is there's a lot of stocks I'm watching. When levels come, they come. And guess what? If everyone panics and sells Nvidia off and we break that recent pivot at 169, we're in the low 160s, you can put Nvidia right there because I am a big fan of Nvidia down at 160. So I'd say those are some names. I gave you that. Amazon just had a big rally for us. We were buyers down at 220. It got all the way to 215. I think anywhere near the 200, I'd be buying Amazon as well. Yeah, so there are some stocks I like. Everyone loves space, so this is not new, but the ones I'm watching are Rocket Labs, ASTS, but they're all in fuego right now. Rocket Labs up another 7% today, but I think you can buy these on pullbacks all the way till the end of the year because this story with SpaceX is just getting started, frankly. One little baby one I want to mention. So some buddies of mine, some of the smarter money on Wall Street, in my opinion, smaller guys, but really well known, are involved in EVTL, which is one of these crazy flying taxi companies. Tons of insider buying last month. Stock went up over 100%, is now pulling back. EVTL is another one I'm looking at. This is long-term spec money, but I could easily see it being up a lot over the next couple of years. That's it.
All right, great. Nice little idea there at the end of maybe something that not everyone is looking at. So that's nice. All right, David, thank you. I'm going to let you go. David is a real trader, so I want to let him get back to that. But if you'd like his free newsletter, this is sent out every week on Tuesdays. You get David's trading game plan for the whole day, his levels, what analyst calls he's focused on, etc., all in an email to your inbox Tuesday morning before they open. So you can go to t3live.com/DP for that. David, have a great rest of your week. Thanks so much for doing this today.
You too. Enjoy the week. Bye-bye.
All right, bye.